Okay, so you can see over here, it's called the fib channel. And you will find it over here on the left-hand side. Not that one, sorry, this one over here. Fib channel. Okay. And it's literally just a 0, a 50, and a 1. So if I show you that, it's literally 0, 50, and a 1.
Sorry, Ali.
Yes.
Do you know how we can find that tool on MetaTrader?
To be honest, I really don't. I will highly suggest that you try and transition into doing your analysis on TradingView. And the reason being, and that goes for everybody, guys, like I know MetaTrader, it's awesome to have, you know, when you're opening your trades and being able to close them and stuff like that. But in terms of your analysis, using TradingView is just going to be next level game changer. It makes it so easy with the tools that we can use. It makes it so much easier to be able to analyze. So yeah, I highly recommend everybody being on TradingView. Go create an account. You don't need to have a paid account. If you want to do back testing and you know, be able to use the replay bar, that does cost money, but I can assure you, I literally didn't have that for over 2 years of trading, and you don't need it. Marco still doesn't have the paid version. Okay, you don't need the paid version. You just need to focus on the simple of the simplest things. Okay,
thank you so much.
No problem. Okay, so let's continue. Oh yes.
Can I ask you something? You said if the trend is going to change the direction, you are looking at the higher high of the swing high being broken.
Before we even get to the highs, okay, before we get to the highs, if this market is buying, right, the market is making higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. And that's why I asked the question, who thinks that the market is going to fail at this high or take out this high? And a lot of you said it's going to fail. Okay, now let me give you a word of advice. Don't think in terms of what you at this point. It doesn't mean that that high is going to hold. Okay, so I want you to look for yourself and create your own narrative. Okay, so a lot of you said that the market's going to fail, and yes, it can potentially fail. But the fact that the market respected this low, we should take out this high. Okay, now if the market is not going to take out the high, or the market takes out the high and eventually it tells us that it is changing its tone from bullish to bearish, what is the first thing that it needs to do? What does it need to take out first?
A high.
Make a high.
Low.
A low.
The previous low.
The low.
Yeah, my question was, if the market now breaks the low, the
So
low
if
high,
the market did this,
then it's going to go back to premium and then goes down.
so if the market broke this low, let's pretend, okay, the market started coming down and the market broke this low. Okay. If the market broke that low and we are not respecting lows anymore, now what do we expect to happen? We put our trading range. That's our new trading range. Okay. And now we expect for the market to come into
Bearish.
yes, bearish, and that means the market will come into premium to sell off. So basically start failing the highs because we've taken out the low. So the first sign is the low being taken out. Okay. Once the low gets taken out, we now anticipate market starting to fail the highs and take out the lows, fail the highs and take out the lows, fail the highs and take out the lows. But the first sign is that that low must be taken out.
Ali,
You with me?
But Ali, do you need to wait to get confirmation?
Yes, we're going to get into the confirmation, but I just want everybody to understand what we're talking about in terms of the trend, right? Is everybody 100% with me?
I just have one question.
Yes, Alan.
Sure. Okay. Yeah.
So it takes out that swing low where you were currently at, right? Now the market's gone into bearish. Will it definitely go back to premium pricing to gather liquidity and then continue selling off?
Not always perfectly, no.
Okay.
But most of the time, like let's call it 90% of the time, yes.
Okay. Thank you so much.
No problem. No problem. Okay, so essentially, in terms of trend, everybody understands in order for market to make higher highs, it needs to respect the lows. Okay, and in order for the market to change from bullish to bearish, it needs to disrespect that low and start taking out lows so that it can start failing highs and bring the market down. Okay, so now let's look at this particular structure, right? If we look at this particular structure on a 15-minute time frame, right? Let me just take that away. Okay. So now we are analyzing our swing structure, okay? However, we're going to get a bit more in detail. So as the market starts to create higher highs, higher lows, higher highs, higher lows, we start, when we look at the 15-minute structure, right? We now monitoring fractal structure. Okay, this is now fractal structure that we start monitoring. Now, can you all agree with me that the last low that had momentum to take out this previous high was the one that I've selected? Okay.
Yes, correct.
We would all agree.
Yes, correct.
Ali,
Yes.
can you please explain that? I'm lost. I'm confused.
Okay. So remember, for our fractal structure, we are looking at the last low that had momentum to break the previous high. Okay. So as the market creates its structure, remember what happens on the lower time frame is going to happen on the higher time frame eventually. Okay. Now, when I explained in the beginning, our structure, I said, we've got a low and we've got a high. Now, on a swing point, the market is just coming down and then it's creating a new high. But in order to come down, what does the market have to do fractally? Okay, when we push up, the market has to make higher highs and higher lows. And when we come down, what do we have to take out?
No.
Low. Okay, so now when we take out the lows, we're making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Eventually then we start taking out highs again. Okay, and the market starts to push back up. Okay, so now bearing that in mind, let's have a look at this. So fractally, the market's making higher highs, higher lows, higher highs, higher lows, higher highs. Okay, and what happens when the market takes out this low?
Change of character.
Change of character, right? Which means the market is changing from bullish to bearish. Marco will get into change of character also again next week. So we'll have a little bit of a refresher on that. Okay, but I just want to make sure everybody clearly understands it. Okay, so now we understand the market is telling us it can potentially start to come down. Okay, now can we all see that if we had to highlight our new trading range with our premium and discount tool, what do we expect to happen in premium?
Going to go up.
Market is
Price to drop.
Yes, price to drop, right? So we expect market to come into premium and then the market to start taking out lows. Okay, and we can see clearly how the market did exactly that. Into premium, taking out lows. Okay, so that is exactly how you would catch your trade. You would wait for price to come into premium and you would place your trade in premium in order to sell back into discount. Okay, now bear in mind that when you get involved your first take profit is always structure. Okay, so in other words, this low, once market sells off from this high, this low is your first take profit. Okay, and you start to monitor the structure to the left-hand side as we go. Okay, now I'll tell you why I say that, because can you all agree with me that if we have to look at our 15-minute structure, right? If we look at our 15-minute structure, can you all agree with me that this over here was the lowest the market went? Okay, before this new high, before this break of structure over here. Can you all agree with me?
Yes,
Okay.
Yes.
Okay, so now once the market breaks that structure again to the top side, right? What was the lowest that the market went before breaking that new structure? This point right here, right?
Yeah.
Okay, that was the lowest that the market went. So you can see how the swing structure starts to get smaller. Okay, now remember what I said to you is that the fractal structure can tell you that we're changing character, but then we end up coming to the swing structures low and we can continue to push to the upside. Okay, so look what happens here. As the market fractally takes out that structure, where do we come to, right? Okay, what do we do here at the low? What happens here at the low? We respect the low. How do we know that the low is being respected? Who can tell me? What do you
Broken. Hasn't been
What's
broken.
broken?
There was a
There-
break of structure to the upside.
There we go. Okay, there was now
Yeah, I did.
another change of character to the upside. Okay, so fractally, we broke structure, we failed the high, we came to the swing. Then fractally, we changed character back to the upside. This is our new trading range. What are we expecting to happen in this trading range?
It's come to discount and break the
Yeah.
Right? Come to
Discount.
discount and then buy.
yeah, there we go. Okay.
Okay. And now after the market buys back up again,
We have a new
Change of
structure.
character.
right?
Mm.
We have a change of character to the upside, but this is where we can potentially see if the market wants to fail this high again, we can see another change of character to the downside. And if we see that happen again, then we look for sells. Okay. Are you all with me, guys? Is everybody with me?
Sorry,
Try to
Ali.
make it as simple as possible. Yes.
So you basically, in each time frame, looking at a major structure and minor structure and how we can trade it.
Yes, 100%.
Oh, I see. Thank you.
Okay, so but the most important is that you focus on the swing.
Mm.
You always focus on the swing. You focus what the swing is telling you, because otherwise everybody in at this trade over here is holding because they expect the market to take out the low. But the market doesn't have to take out the low. It can just test that swing low and then it can take out the high again.
Hi, Ali.
How's it? How are you?
Ali, I'm very well, thank you. Ali, I just have a quick question based on the lines you just drew.
Yes.
The one that is currently still on and the one you've deleted, which one do we select now, actually now? The one down there, which is still there, or the one that took out this, the one before taking out the structure? The
Okay,
one you
hold on.
just removed.
So this one over here,
No, the one on top.
the one on top.
No, sorry. Here where we have the long wicks that went down, where we went into discount,
Yes.
right? There. You had a line there now.
Yes.
You explained that that is now our new range. So once we
Yes.
broke that 15-minute range, it wasn't that now also a change of character, because that always throws me out. That's why I'm just asking the question. I
Okay,
don't want
sure.
to miss that point.
No problem. I'll explain to you exactly why they just liquidated that low and they went up. Okay. Now, I don't want to confuse anybody because we haven't gotten into imbalance yet, but it's because there was imbalance resting right here.
Okay, I just wanted to confirm that.
Yeah, but you're 100% correct. Essentially, price should respect that low and not wick below it. But if there's imbalance or liquidity laying below that, which we will get into, everybody, then you've got to be aware of those things. Makes sense. You with me, Charlotte?
Yes, thank you, Ali.
No problem. No problem. Okay, cool.
Ellie,
So,
can I ask?
yes, go for it.
I think I'm a bit lost on the way you just map the structure from on the left hand side on this 15 minutes.
Over
Because
here.
now no from the start where you selected the lowest point on the left.
This one.
Yeah. So this is the swing low.
Yes. Because why is it the swing? It's the lowest that the market went before taking out the previous high.
So where do you start mapping up your what do you call it, your fractals? You
mark out your fractals once price has gotten to your higher time frame POI. Okay, so if price is not at a higher time frame POI, so for example, okay, we're still going to get into this, but for example, why could price have started to drop from this specific point? Okay, now don't worry about it, guys, but this is an order block. Okay, we're going to get into it, but that is our higher time frame POI. So now that price has approached my higher time frame POI, I am expecting the market to potentially sell off. So that's why now I'm monitoring price has arrived in that potential point of interest where the market could sell off. Okay, and that's why I'm looking for the market on the smaller timeframes on the fractals to start confirming for me whether they are ready to sell or not.
Okay, so there's no need for me to start from the start to mark the fractals. I just monitor it when it comes to the higher time frame POI.
Yes. So for example, if we had to look at how the market bought, right? So let's take the market to where we are here, right? So what would we be looking for essentially, right? So this is where we know that the market could potentially be selling, okay? Whereas if we look at our 4-hour structure, right, we would be saying that the market is bullish. So even if you didn't catch that sell, don't worry about, you don't have to worry about how you would have caught that sell, because this is how you catch a sniper move before you catch a swing trade, okay? But for now, just understand the structure, right? We understand that our 4-hour structure is still bullish, okay? So now, once the market comes into discount, okay, what will we be looking for at this point?
Buys.
So we look for the fact. Okay,
so this is where you can monitor either a 15-minute or a 5-minute structure. Okay, so if we look at a 5-minute structure, okay, would you all agree with me that this was the last fractal high and the last fractal low? Okay, agreed?
Yes.
Okay, so when the market takes out this fractal high at this point over here, we can now monitor our fractal structure and our swing structure. Okay, now,
And sorry, before we continue, quickly explain to me, why do we choose that high and not the one that actually caused the momentum to come down? That one, yeah.
Okay, so remember, this is the one that had momentum to take out this low. Okay. But this one was the highest the market went before taking out the previous low. So Charlotte, this would be your swing. Okay. And this would be your fractal structure.
So which trading
Okay.
range do we need to draw out? Which trading range do we need to draw the swing trading range or the fractal?
You need to understand where both is sitting. So for now, I want you to focus on understanding where is my fractal and where is my swing. Most importantly, you must understand where your swing is. Okay, the only time that you are looking at your fractal is when you're looking to get an entry. Okay, because you're going to see what's going to happen, right? The market then takes out this level over here. Okay, and the market now creates a new low, which gave momentum to the new high. Okay, and if we place our fib, price comes perfectly into discount, and then the market buys up again.
Yeah, I'm confused. I'm
Okay.
confused.
Okay, remember, what is discount and premium?
I think, Alice, to interrupt you, I think makes a lot of people confused is actually how good you know the words and now we don't know the words yet. I think that's most of the time what confuses me.
It's not that, it's the way we understand structure and premium and discount, but now this swing and fractals is kind of
Okay.
confusing now on using what
So
different time
So
frames.
remember, okay, cool. So remember, I've also been looking at the market for a lot longer. So the way that my eye picks it up is a lot more trained than yours, but you will get better at it. It's just about back testing. Okay. So for now, you need to just focus on your swings. If the fractal is what is for now, okay. But essentially, if the market makes a high and a low, okay, we know that in order for the market to push up, it doesn't just make one bullish candle, right? It has little pushes and pullbacks, little pushes and pullbacks, little pushes and pullbacks, okay? So that is our fractal structure. So that is essentially our little fractal trading ranges that the market makes. Okay, it breaks structure, it makes a new low and a high. It breaks structure, it makes a new low and a new high. Okay, that is our fractal range. Now, when the market comes into discount, how does it get into discount? It has to obviously take out a low. Okay, so we now expect the market to make lower lows, lower highs, lower lows, lower highs, until the market has enough money, wherever it may be, okay, until it has enough money to now take out the high. So once the market fractally, okay, so this was your trading range. Once the market fractally takes out this high, now you've got a new trading range. Okay, so can you see? Essentially, first, we were looking just to buy somewhere here in discount. Okay, but after the market gave us this confirmation that we're now taking out highs, we're now going to place our fib channel to understand where is discount of this new trading range. And can you see how we minimize our entry?
So basically, Ali, we mark out our swing points.
Yes.
And then once we get into discount in our swing range,
Yes.
on our bigger time frame, then only we focus on the fractal.
Yes, 100%.
Okay.
Okay. Let me just check the chat quick. Okay. Where would that was a bit earlier.
Sorry, Ellie.
So
Yes. Go for it.
So once you identify your swing points on your higher time frame,
Mhm.
then you go and you wait for price to go into discount. Then you're gonna go
Yes.
to a lower time frame. So
Yes.
again in a lower time frame, you're gonna look at your swing points in a lower time frame first.
Correct. 100%.
Then look
Okay.
for the fractal structure
Yes.
in that
Exactly.
same lower time frame.
Yes. In
That's
that
what was
order.
confusing. Oh, I see.
Okay. You with me?
Yeah, I see.
Okay. So we understand that this is our swing. Okay. Oh, that was something else. Okay. Do we understand that this is our swing? Okay, our swing low and our swing high. Right? And as price approaches discount of the swing, we now jump to a lower time frame. Okay? So as price approaches the higher time frame swings discount, we jump on a lower time frame to observe. Okay? And now we wait for a confirmation. So a confirmation that the bulls are in control, it means structurally, what is the market doing? We start?
Breaking higher
Breaking
high.
fractals.
Exactly, we start breaking highs. Okay, so that's our first confirmation once we take out this high, that the bulls are in control. And now we mark out our new trading range, okay? So now that we know the market's told us, guys, remember, you mustn't get involved until the market tells you the story. Please, Pumla, stop writing on my screen. I don't know if it's by mistake, but please, if you can erase it, I would appreciate that. Okay, so wait for the market to give you an indication that the bulls are in control, which means the highs are now being taken out. Okay, and then we mark out our new trading range. Wait in discount for price to approach and enter our buys in discount. Okay, does this make sense to everybody?
So then our first TP will be then in premium at structure.
Yes.
Yes. This is always, 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 always your first take profit over here. Because what happens if the market comes to this high and then starts failing the high, and then we start having a change of character to bring price lower again? It can happen. Like what we've seen
So
over the
which
last few
which high
weeks.
do I? Okay, sorry.
Yeah. I was just going to say
I
what
wa- I
we've
was
seen over the
asking-
last few weeks.
Which,
Yeah.
which high should I target first? The first range that we in, or the swing range?
Okay, so it really depends. You need to monitor, okay? Because the market can pull back, okay? It can then come to this high and it can fail this high as well. So your first structure is always your top of your trading range. If the market has a small pullback here, okay, and you're still holding your positions, this is where your first take profit is. Let's put it that way. So you take your first profit off the table there. If you still have a runner, your SL at that point is definitely either in profit or at break even, at the hopes that price then pushes to take, either test this high or take that high out. Okay, so this is your first take profit.
So Ali, do you always focus on the first structure, then you take most of your profits and then just leave runners, or?
Yeah, I take 80% off of the table, depending on what range I'm trading. So like, for example, right, I'll give you an example. This is take profit 2. Okay, so at take profit 1, this is where you need to take partials, closing some of your positions off the table. Okay, because even the market can do this. The market can go like this, and then it can do this and this and this and this, and it can range before it takes out the high. Okay, so if the market does that, rather wait for the market to take your profit here, and if the market comes back to the low and it gives you another smaller little indication that we're going to buy, jump in again and then ride the wave. Whoops. Just want to move.
Riding the wave.
Okay, so this is how we ride the wave. We wait for the right movements, right? So this is your first entry. Okay, that's why we take profits there, because it doesn't have to break the high, it can just test it. But if it comes down again and it respects the low and it gives us another confirmation, wait, the bulls are still in control, then there's your second entry. Everybody
So do
with
we
me,
enter
guys?
at that? Do we enter at support and resistance that we were taught last week, or is that a whole different thing I'm talking about now?
Wait, you're saying we enter? No, so we never enter at support or resistance, because that's essentially how the retail traders get caught out. But we enter at supply and demand, okay, which we'll get into in detail. But essentially, supply and demand,
Okay.
demand sits in discount and supply sits in premium. Byron, sorry, you have a question there.
Can I ask something?
Also,
Yes, sure.
So if let's say as you see the current price we own on Nasdaq, so the price seems like it's rated of an imbalance. So is it possible for price to react off an imbalance, then start to
It is.
push to the upside?
It-
So is it
yes, it
currently
Okay, well, we're
okay,
not
okay.
really there yet, so I don't want to confuse everyone, to be honest.
Okay, no problem.
But yeah, that is why price is pushing up right now. And
Sorry.
price can fail at those particular things, but we will get in detail with them. I promise you that.
Okay, it's
Okay,
just that
also, I just
I was
wanted to
confused
ask-
that
Okay,
Sorry?
hold on, guys. Just let him finish his question. Yes.
so it's just that I was confused that so the price, as you said, the price have to raise to an S&P or some POI. So what happened today is the price came to an imbalance before and give me a change of character, and then so I wasn't able to take a buy because it was reacting off an imbalance which is known as the price have to fill it before and it took off. So especially because on a 4-hour time frame, I see a demand zone. So we're
Yeah.
expecting the price to came to a demand zone and give me a reaction of the demand zone before it took off. But what it did is it came to an imbalance and then started to took off. So that's why I was confused that
Yeah.
am I have
Okay.
to take a trade or not?
So for now, I want you to forget about imbalance, forget about order blocks, forget about anything that we haven't taught up to this point. And the reason why I'm telling you that, okay, is because structure must come first. Okay, so structure
Okay.
must come first. Okay, so when price comes into discount, like we saw on the 4-hour time frame, it didn't matter if we didn't know anything with regards to order blocks or imbalance or breaker blocks or anything of that sort. Could we not have gotten an entry here just based on structure? Okay, so that's what I'm saying. And the reason why I'm telling you that is because I want you to focus on structure so that you can train your eye for it. Okay, you're going to train your eye to get good at picking up those structures. So everything else for now just needs to wait so that you can really focus on structure. I promise you, take it from me, take it from people who have even done the mentorship before. If you don't understand structure clearly, you won't succeed. Okay, structure is the language of the market. So if we
Very
understand,
important.
yeah, it's very, very important. If we understand how to look at structure correctly, okay, it's going to show you if you're buying, if you're selling. When it's showing you a fake buy or a fake sell, it's going to show you all of those things before we even get into order blocks and demand and supply. But I promise you, we will get into that. And when we do, it's going to all make sense because the structure is the foundation of that.
Ali,
I just wanted to ask about, sorry, I asked already a question. Sorry,
Okay.
I wanted to ask about last week's week lows and week highs. That what we didn't go over it.
Sure.
Will it be
Yeah,
the time
sure.
today?
Perfect, right? So essentially, if we have to look at the market here, I did take a picture of this, I think, but let me just make sure that I did so that I can send this to you guys.
Also, another thing I just want to ask before this thing goes off. Friday, are we gonna have a recap of a recap we were supposed to have last week and this week's work, or just
Yes.
last week's work?
No, you're going to go through everything. You're going to go through everything that Marco
Okay.
went through with you guys and what I've gone through with you guys.
Okay, thank you so much.
But beforehand, guys, please go and backtest. The recap class is not to be confused about being retaught. You need to go and backtest what I've shown you here tonight, put it to the test, you know, move the market to a certain point and say, right, if the market was at this point right here, what is the market telling me? Okay, where's my swing structure? Here was my low. Okay, so here was my high, the highest the market went before taking out this previous low. So there is my swing structure. Okay, and now what would you do? You would mark out your premium and discount. Let me just mute everybody. Sorry, guys. Okay, so you would mark out your structure. You mark out your premium and discount. You notice what happens when price comes to that structure. Okay, so now that we're approaching that structure, although this would now be our swing low, okay, at least on our 15-minute time frame. Now that price has come into the structure, you would now see if on the lower time frames, the market gives you a confirmation that we are now taking out lows. And if we take out the low, what do? We mark out our new trading range. Okay, we make our premium and discount tool, our fib channel